Hi, today is Monday the 26th, and this is the SPX Outlook for the coming week. It's going to be a very eventful week. We've got Tesla earnings at the close today. We have Google, Apple, and Microsoft tomorrow, and Amazon on Thursday. And just to top it all, we have the FOMC meeting on Wednesday. So we can expect a lot this week. The first thing we notice is that the SPX VIX correlation is pretty poor at -10%. So basically it shows that the both are totally decorrelated, and generally this is not sustainable. The market has to find a way back to its long-term correlation average, about 3/4, -74%, as you can see here. And either the market will shoot to the stars with volatility crashing, or at least volatility crashing and market going slightly up because it's gone up quite a bit already, or the market will have to follow higher volatility and start diving, and we will look at support levels right now. Volumes have been fairly low, okay, about 3.5 billion. It's pre-COVID average, but it's not exactly what we would expect in a market that is in quantitative easing and so on and so forth. And we realize also that this is a retail-driven bull market. Institutions are just selling without making prices move. And at the same time, this decorrelation is also an indication that the hedging activity has picked up. We have the VIX at 18.5, 19 at this point, which is quite high for all-time highs. So the hedging activity has been really sustained in this bull market, and something has to give. Again, it's going to be either VIX up or SPX up and volatility crashing, but so we have to act accordingly. We will look at our positions in the next video. Okay, so for now, let's focus on this. This is a 4-hour chart. I've started adding the volume profile on my chart to see where the large positions or large orders have been taken place, and we can see it's around the 50% fib that we have a lot of volume, 43.20, 43.30. Generally, if you study market profile, you often look at a fixed range from a high to a low, and you'll see the levels is here. We would need to see a lot of volume here to see a potential reversal, which we are not seeing right now. The volumes are pretty slim around here, larger volumes around here. So of course over time there will be more volume over here, but so we will see. Technically, I see that the former resistance, although it has not broken yet, it's still pretty strong across all time frames. So technically we would normally see this level being tested for support. So I would suspect the market will try and test 43.75, 43.80 today. As far as supports are concerned, we see 43.50, 25, 4300 seems like a good round number. At the moment, I don't see the market reversing hard on. We will see whether the test of this level leads to a rejection, but most probably it's going to bounce off again. If we look at the longer time frame, here the market looks very bullish, breaking all-time highs. We've got a potential target here around 44.75, but at the same time this level hasn't broken here either, so there could be hesitation, and the converse of the level rejection that we saw last week would be that a strong bounce to actually confirm that the market is really going up, and this level then breaks. So at this time, bullish momentum. As I say, it's much retail driven, but also with a lot of hedging activity along with it. Now let's look at today. Today we have market taking a little bit of profit from the highs on Friday. Still not much volume, but this is normal in pre-market activity. I think we would need to see this peak of volume being exceeded around here to then see maybe the market going down. But again, the 43.75 to 43.80 is the key level. As we see here, this is also, this green line is a bullish resilience, so all the more reason to see buyers trying to fill the dip if this level is reached. Of course, here again we see this strong fib with a large volume bar. So we have a possible support on 43.50, 43.20 to 43.30. Then we see 4300. Something that maybe looks unusual is that the support levels have shifted down, and generally it's actually a good indication the market is ready to retrace. Of course, when it went down, shortly after the market started going into profit taking. I would still look at this key level to see whether this lower supports have a meaning or not. Okay, I think this is it for now. So for today we will test this. We will check whether this level is tested. I plotted this upward channel just in case. I don't think it's very valid, but we will see. There was a low here, so eventually I will clone this line and draw a lower channel, because of course the market can actually dip a little lower and then go into a parallel channel upward. So we will see how it goes. So really we have to go with the flow, knowing it's going to be a very eventful week. This very unusual SPX VIX decorrelation has to give way to a larger move either way. I would suspect that if 43.75 is broken, it could actually be going more sharply down, but yet again, nothing big. We've got those fibs here that are most probably going to cushion any fall. Okay, there will be, of course, more frequent updates on Slack. This is going to be a very eventful week. So if you're not on my Rhino Slack, please drop a message below for an invite, and we'll see you there. Okay, thank you for watching, and bye for now.